Hi guys, welcome to my market breakdown of USDCAD. So what we're going to do is we're going to break this down entirely using top-down analysis from the monthly time frame down to the weekly. And I'm going to show you basically how to swing trade multiple opportunities within this pair. Now there's obviously a lot of smaller time frame opportunities as well on the daily, the 4 hour, but we're not going to cover that so much today. We're just going to show how we can get sort of 1 to 6s, 1 to 10s, just some really swing trade in this pair. So the first thing I want to do on any time frame when I'm beginning on the monthly is to plot a couple of levels. Now I'm not really that interested usually within the monthly time frame, simply because there's only normally around 12 candles within a year. So although I'm aware of the monthly candles, because they're not very regular, I'll only really check them when a new month has rolled over. Generally I'm going off the weekly time frame. So what I want to do now is just plot a couple of levels on the monthly. So the first level I want to plot is here, which is around the 136.50. Let's just make this black. And the next level I want to plot on this chart will be here, which will be 125.50. So these are two levels. Now I've done a bar replay from basically sort of the end of March, beginning of April. So now we're going to flick down to the weekly and see how we could have found multiple opportunities within this pair. Okay, so this is the weekly time frames. We're going to go from the 19th of March, around that kind of area. So basically we can see here where this first move up, this pullback, and then obviously we came up to create this new higher high. Now simply what we can do when this has happened is the first thing I teach you guys is to apply your fib tool once price has shown that it has stopped. So let me just add my fib levels back into this. Got the 50%, 618 and 786. Now for this particular trade, I would be looking to target around the 618 simply because that's where our monthly level is. So therefore I'd be highlighting this area as an area of interest before we've even got there. Now I know we're sort of around sort of 400 pips away from this particular target, but obviously like I said, I'm trying to show you guys how to swing trade. So therefore we wouldn't be doing anything now until price begins to approach this level. So let's just let this play out. Now when we begin to approach the area of interest, obviously we have to be scaling right down. So now we're starting to approach it. I'm going to just pause this and scale right down now into the hourly time frame. So we're literally going from the weekly right down to the hourly to find a really, really good entry. Okay, so we're now in the hourly time frame, and as you can see, this is our high point here where we've come from, and now we've dropped down. We're beginning to approach the 618, which is the monthly level, and as we begin to approach this level, I'm looking for entries. So let's just let this play out and see if we could have found any entries. Okay, so this green line here and this sort of monthly level is the area in which we're interested in buying this to take this a lot higher. Because as you can see within the sequence, we're creating higher lows and higher highs. So now we're anticipating to buy this to create this higher low and then anticipate a new higher high. So as we begin to drop down and approach our monthly level on our 618, we're now looking for the best entry possible. It's really important that we come down to the hourly time frame because that allows us to have super tight stops and a really, really good entry. There's no need for us to be on the daily, the 4 hour or the 2 hour time frame. Okay, so we've had this first tap, which has tapped our monthly level exactly. As I teach you guys, we're always looking for that second tap to provide ourselves with an entry. Okay, so in terms of actual entries, the best place that you could have got in here would be placing a long off this pin bar rejection. We need to allow ourselves enough stops to cover any kind of like price movement. So let's just watch how this plays out. We'll set our targets in just a second. So this is the second tap rejection. So as you can see, we came close to being stopped out, but because we allowed ourselves enough space to breathe, there was no area of concern. So now you can see that we've kind of hit this level a few times, and now we're off to the upside. So now let's scale out and see how we could have got a target for this. Okay, so now we're back on the daily time frame. Now, as I've taught you guys before with market rules and tools, we're always aiming to first target the 0% just in case we create this double top. And then if we break this, we're always targeting the minus 27%. So therefore, once price hits this level here, we'd be looking to take off a percentage of our profit, maybe sort of 30%, 50%, whatever you're comfortable with, but something to secure some kind of profit. So the next target would be minus 27%, which makes logical sense because within this bullish sequence, we're creating higher lows and higher highs. So therefore, naturally, we'd be now anticipating a new higher high. Now, when we approach the minus 27%, that is where we'll be taking profit on this particular trade. And in addition to that, we'll probably look for some shorts as well to short it back down again to the next retracement. So let's just see how this plays out. Okay, so as we begin to approach this level here, it's now really important that we begin to scale down into this level to see if we can find any shorts to short this back down once price has showed that it's stopped. So let's now scale down back down to, let's go back down to the 4 hour. Okay, so now we're on the 4 hour time frame. So as I said, this was the box that we're interested in. This is the minus 27% here. Now this is where we'll be targeting to actually close our position entirely on this particular trade. So that will be our first trade on this particular pair. Now when we begin to approach this level, it's very important that we're down on the smaller time frames, again like we did in the first example, to allow us to get really, really tight entries. So I'm just going to click play on this and see how price plays out to see if we could have found an entry and to see if price could have stopped to show us where we could have applied our next fib. Okay, so we had the first spike through the minus 27%. So that's this trade now complete. And now I'm looking for price to now slow down and form some kind of obvious sign that price is respecting this level and it's now going to roll over. So that's our first spike. So it's our first tap. So we aim to try and get in on the second tap. Okay, so that's our second tap there. So we can see this level's now been respected twice. So that's a really nice confirmation. So therefore we would be getting in on this 4 hour close here. And we'd be looking to go short here, ensuring that our stop losses are protected and above these previous wicks. So therefore probably in this scenario, something like a 65 pip stop would be enough. Now for targets, we're going to have to zone back out to the daily to apply fib on this large move to the upside to try and find out where our next targets are going to be. So let's now scale back out to the daily. Okay, so we're now back on the daily time frame. So for targets for this next short position, we'd have to basically now apply a fib on our most recent leg to the upside to try and find some kind of target, because obviously we know that we're within a bullish sequence where we're creating higher lows and higher highs. So now we're anticipating a new higher low, somewhere around here, somewhere above these points here. So therefore the easiest way we can do that is we can apply a fib from here to here. And now we're trying to figure out which fib level this is going to go to create our new higher low. So we have to look left and look at any other conferences that we can use to try and suggest where price is going to go next. Now I can already see market structure here around this level here. So therefore I'm assuming the price is probably going to come down to this kind of region here to create the new higher low. So therefore my targets for this particular trade would be around here, which will provide me with hopefully close to a 1 to 7. So let's play this out, and therefore I would also then be looking within this area of interest to place my new long position to take this even higher. Okay, let's click play and let this play out. Okay, so we're now approaching the area in which we're looking to hopefully place a long position. So we now have to scale right down again to start seeing how price is reacting to this level to see if it's actually valid for us to place a long position. So now let's scale back down to the hourly to find a really tight entry. Okay, so we're now in the hourly time frame and we're beginning to approach the area of interest, which is the previous market structure, the 61.8%, to hopefully stall around here so we can look to place some long positions. So therefore we'd be exiting our short position from the top and placing a long position around the 61.8. We favour the 61.8 because market structure lines up with this level. So let's let price run out until we get to this area of interest. Now it's very important that we wait for price to stop. At this point, price really showed us no signs of stopping. Now this is when we begin to build a little bit of a base. We can't execute at all until prices show that it's stopped. Now at this point here, I'm beginning to think that price is beginning to stop. We formed this bullish engulfing candlestick on the hourly. We came up, we came back down. We formed this double bottom here, which is this region here. And then we formed this bullish engulfing candlestick. So it's very likely that on the higher time frames we're around this kind of zone that we're interested in. So therefore I probably would have just placed a long off this bullish engulfing candlestick and given myself enough pips, maybe something like a 40 pip stop loss. You could even do a little bit more than that. You could do something like 45 just to let it breathe. And we have to now scale back out to figure out where our target is going to be long term for this particular trade. So let's just see how it plays out initially and see if we would have actually got stopped out. Okay, so we're pretty safe now. So let's now scale out and look for some targets for this particular trade. So this date is the 5th of October. So let's scale back out. Okay, so this is our next trade here. So now we need to figure out where targets are now. Like I said, the first place that we'd look to take some profit off this would be the 0%, just in case we form this double top, and then we'd really be wanting to target minus 27% as a long-term target. Now, as you can see, the minus 20% lines up perfect with our previous monthly level. So this is a really, really great target because it's got previous market structure, which is a monthly level. It's a very strong level. Now, also what we can do once we've got this is you can see that we're creating higher lows and higher highs. Now, once we've got these two touches here, we can also apply a trend line to join these 2 points up. Something like that. And now we're targeting up here. Now, when we get up to this level here, this is also a predetermined area of interest before it even gets here to begin also then looking for some shorts. So this particular trade is a 1 to 18, this is a 1 to 7, and this is a 1 to 17. So let's now see how this plays out. Okay, so now we begin to approach this area of interest where we're looking to 1, take profit, and 2, then look for more entries to take this lower. So let's now scale back down. So we're currently on the 24th of December. So let's now scale down and look for some really, really good entries to take this short. Okay, so this is the 4-hour time frame now, and we're beginning to approach the target where we'll be closing our long position, an 800 pip gain. So now I'm looking to place shorts. The reason why I'm looking to place shorts is because I've hit minus 27% and the monthly level. So now we have to find out where we would place our shorts on this particular trade. Okay, so once I'm starting to see these wicks and these candlesticks to suggest that price is rejecting the monthly level and the minus 27%, I'd simply just have to wait for a few of these wicks to form first, so then I can place my short position, let's say even off this candlestick here. As long as I'm allowing myself enough room, maybe something like 45 pips above the previous wicks, that would be my entry for this particular trade. Now let's scale out and see where our target would have been on this particular trade. Okay, so for this particular trade, all we simply have to do is delete this fib now, and then apply a fib from here to here. And we can see that this trend line, this third touch of this trend line, that we have plotted on our chart, lines up perfectly with the 618. So therefore, we'd be looking to hold this trade to around this kind of region here. Great, so that's a 1 to 11. So let's see how this plays out. Now, when we begin to approach the 618, we want to start looking for entries off this. We want to start looking at how we could have also bought this again because obviously we're still within this bullish sequence, so therefore we would want to be targeting up to these highs once more, and just basically keep doing this over and over again. So when we begin to approach this level here, we want to look for reasons to start buying this particular pair. So now let's scale down to the smaller time frames to begin seeing where we could have maybe got an entry when we begin to approach this price. Okay, so we're now basically at the 618, where we're looking to place a long position from here. So our targets have been met for this short position. We're looking to place a long position. So when we begin to form this kind of price action, what we would have done is we would have boxed this off. We would have basically seen 1 tap, 2 tap, 3 tap, so therefore we would have got in on the second tap. We would have long this from here on this bullish engulfing candlestick. Given our stop loss something like 40 pips, give us some space to breathe, and we would obviously be looking to target the next 0% and the minus 27%. And let's see how this trade played out to see if it would have stopped us out. So at this point here, this is where we would have thought, obviously we've broken out of the range now. So this would have probably been alarm bells. We haven't quite been stopped out just yet. This is obviously when we got stopped out. Now we can quite clearly see that although we did get stopped out, we would have been looking for more reasons to enter this trade once more. Now we obviously needed to come down and touch this trend line. And when we did touch it, we formed this hourly bullish engulfing candlestick. So therefore, that would have been our next entry. And again, we'd put our stop losses around 40, 45 pips, something like that. Give it space to breathe. Let's delete this. Now let's zoom out and begin looking for targets. Let's just see if we would have got stopped out first. Okay, we're good. So let's now zoom out and see where our targets would have been for this particular trade. Okay, so for targets for this one, we would be looking to again target the 0%. And then ideally, we want to be targeting the minus 27% as a longer term target, because obviously we're looking to basically form this new higher high. Now we have to be consciously aware of the fact that we do have a strong monthly level here. So therefore, we might want to take off a little bit more profit than usual when we begin to approach this monthly level, just in case we begin to approach it and we reject it again, which is, at times can happen with a strong level like this. Now I can't play this entirely out because basically price is not actually there right now. This is so I'm just going to allow this to stop entirely, so that you can see where price fully stops, because we can't obviously go into the future. So this is actually where price is right now, current price. So therefore we would still be up on this particular trade. Let's have a look at this. Around sort of 400 pips. So even on that basis, this particular trade right now would still be a 1 to 9. But obviously if we try and fulfill the 0% on this particular trade, we're looking at a 1 to 12. So let's just recap on these, and then I'm going to go deeper into how we can get even more entries within this. So our first trade here was a 1 to 17.5. Really crazy trade, and that's simply because we created this sequence here. And when we've done this first leg, it allowed us to draw a fib. We were anticipating the 61.8 because it lined up with the monthly key level of 125 sort of 50. We scaled down to the hourly time frame when we began to approach that level, which allowed us to get a really, really tight entry on seeing the right candlestick formations. Now, if you hadn't have done that, you could have just gone off this bullish engulfing candlestick here. It would have meant that you would have had much bigger stops, sort of like 80, 90 pips, maybe more. But obviously that's not necessary. We've already highlighted this area of an interest. Monthly level, 61.8. So that was our first trade. Now, like I said, when we get to the 0%, which would have been here, we would look to take off some profit here and then try and ride this out to the minus 27%. When we approach the minus 27%, because we created this new higher high, we would then be looking to obviously place some short positions. So therefore, again, we'd be scaling down to the 4 hour, the hourly, to begin looking for some sort of candlestick formations that's suggesting that we are respecting this level and we're looking to roll over. So therefore, what we would do to place targets for this short position, we'd fib this next leg to try and find out where the next point is going to be. Now, we had previous market structure here, and this kind of zone here lined up with the 61.8 from this leg. So this was our next trade here, which was a 1 to 7. And we scaled down again on the 4 hour, the hourly, to find that really, really tight entry. We waited for the first tap, second tap. We got in just after the second tap and used the first tap as benchmarks for stops. And then we closed our position out entirely once we got to the 61.8%. Now, when we began approaching the 61.8, we had to basically wait for the hourly to show us that it stopped. On our first entry, we got stopped out. It was a good trade, but then it broke out of that small hourly box range. So then we had to wait again, and then when price formed almost like a double bottom on the hourly and then produced a bullish engulfing candlestick, that was our entry for this particular trade. Now again, for targets, it was simply from here to here. We would look to take some profit off at the 0%, and then we'd be aiming really to sort of target the monthly level on the minus 27%. So this particular trade was a 1 to nearly 18, so it was a 45 pip stop loss for an 805 pip gain. So that was our next trade, and then our next trade after that was basically when we approached this minus 27%, which is where we'd already determined, which was our monthly level. We then looked for our next entry off this level, and for targets for shorts, we'd simply fib from here to here, and we could see that obviously the 61.8 lined up. At that point, we could apply our trend line. So this is also the third touch and the 61.8%. So therefore, we scaled down to this point here, and we found a nice entry here to take this long as well. So this particular trade as well was a 1 to 12. Now, it hasn't actually fulfilled target just yet, but even if it fulfilled where current price is, that would still be a 1 to 9.5 with a 45 pip stop for a 426 pip gain. Now, ideally, we want to be targeting the monthly level again. Now, we've got to be aware of the fact that because this monthly level is here, we might not actually come as far as the minus 27%. So therefore, it's probably in our best interest on this occasion to take most of our profits off when we get to the 0%, as opposed to just a small chunk. And then obviously, I let the rest run to hopefully meet targets and produce this new higher high. So that's all of our trades on a swing term basis. You can see how we identified areas and then we zoned right down. So what I'm going to do is I'm now going to delete all these entries. And I'm going to show you how we could have got multiple other entries if we had have scaled down on this. So let's go from here, which is one of our last entries around the 61.8 and the third touch for an ascending trend line. Now, when we saw this, and then price came up like this and stopped, if I see something like this, I'm already beginning to think that this is looking like an inverse head and shoulders. So therefore, I'd naturally attach what I believe to be a potential neckline. Now, this is going on the basis that you missed this initial entry. Now, what you can basically do on this leg here to try and find the right shoulder is you'd look for equal movements, something like this, and therefore you would do a fib within a fib to try and find out where your right shoulder is going to meet to place an entry. Now, I can already see by doing this, it looks a little bit messy, but the overlap is The 78.6 lines up perfectly with the 618. So therefore, when price comes back down to here, I'm already interested in this area to place either another long position on top of my previous one, or if I'd missed the first entry here, to place my first entry here. So as price begins to approach this level, I would then be scaling down to try and find a good entry. So let's now scale down on the hourly and see if we could find a really, really good entry on this. Okay, so we're now on the hourly time frame. So price is beginning to approach an area of interest. So let's scale right down and see if we could have found an entry on this. When price finally shows us that it's stopped, we're looking for candlestick formations that are bullish. Now I actually really like this. I really like this candlestick, so I probably would have just gone straight long off here and give myself enough space to breathe, maybe 40 pips. You probably actually could have done a lot less on this. And my overall target would still be the larger fib. So although this is a fib within a fib, I'd still be targeting the larger fib. So let's now scale back out and see where we could have targeted for this as well. So that would be the monthly level. Okay, so this is now the daily. So we can delete this fib within a fib because we're not using those fib extension targets. We're looking to target the main fib, which is the 0% on the monthly key level. So this would be a 1 to 14 trade. And it's beginning to look a lot like an inverse head and shoulders. Okay, so this is actually where current price is. So we're on our way to hit this level. This is just where we are right now. So even if we took profit just here, this is still a 1 to 11. Even if we just took profit at the neckline, it's still a 1 to 5. But our overall target is this. So if we'd missed this entry, let's see if there could have been any other entries that we could have taken on this. So going on the basis of our fib within a fib, let's replay this back. Let's see if we missed this entry, see if there's any others. Let's now scale back down to the hourly. Okay, so I can already see that this was where our first entry was. Now, if we were to take this and we missed this, this would have been our second entry off this candlestick here. And this would have been our third entry here. Now, you wouldn't have seen this on the 4 hour. It just would have looked like one big, massive 4 hour candle. But this is why it's so important to scale down once you've got an area of interest. So you can quite clearly see that this would have been our next third entry. So the market gave us 3 opportunities to get in on this, off the main 618 and the main weekly or daily ascending trend line, and then the fib within the fib, which was the 78.6%. So it actually gave us 3 opportunities to get in on this. Annoying for those who took the first entry, because you'd be waiting and price would be coming back to your entry constantly. But good for those who missed it initially. Now this would have been your last entry in this particular trade, straight off this bearish engulfing candlestick, and you would have basically put your stops to ensure that you clear the previous 2 taps. So as long as you clear these 2 taps, so therefore again you could probably do something like a 40 pip stop. And again, let's zoom back out. Our overall target would be the 0% on the monthly key level. So therefore our target on this would be here. This would be our overall larger target. Now we have got a fib within a fib. So those extensions aren't as important. So therefore we'd be targeting here, which provides us with a 1 to 12 again. So that's another opportunity where we could have got in around here by using this pattern and a fib within a fib, and obviously the main fib. Now let's talk about this area here. So I know we had this entry on these wicks, but let's talk about how we could have got an entry if we hadn't have got in on those wicks. So let's now scale down to this area here and see how we could have got a better entry on this. Right, so our entry was off this wick here, one of these wicks. We waited for the first wicks first to establish that price was respecting this level, and then once we got the first couple of taps, we got in on the third or the fourth wick. Now, this is on the 4-hour time frame, so preferably I like to go down on the hourly, to be honest, to get my better entries. Now, let's just zoom this box out a little bit. Now, what you could have done in this scenario is you basically could have drawn almost like a range here. So let's just drop this down a little bit. This is like a range here within price. And then what you could have done is you could have then added another range kind of support here. And then you could have basically got in on this 4-hour close below both lines. The only problem with this is that basically if you had have gone short here, you'd probably have to do quite a large stop, like in excess of 100 pips. So the next best way you can get an entry on this to get a double confirmation would be actually to scale down even further. So let's go down to the hourly and see if we could have seen some kind of retest of this range support. Okay, so even on the hourly, the entry would have been very similar. You would have still got in around here, which is a similar entry to the 4-hour. So therefore what I would do is I'd actually scale down again. I'd scale right down because I want the tightest entry as possible. So now let's go down to the 15 minute and see if we would have seen it clear on the 15 minute. Okay, so this is our range line here. Now we can already see that on the 15 minute, we did get a retest. You see this little retest here? So you didn't see that on the 4-hour, you didn't see it on the hourly, but you would have seen it on the 15 minute. So therefore you basically could have gone short on the break, on the 15 minute break of this support range. And then you had the retest. You could have basically done this, giving yourselves sort of like a 40 pip stop. Or alternatively, you could have just basically got in on this wick retest. So therefore, because you were waiting for this to break and you were looking for a short entry, you should have really been on the lower time frames. That's what you should have been. On the hourly, the 4-hour, the 15 minute. And you'll be looking for a break outside of this this support that we had going on. And the moment you broke that, you'd be looking for a retest. Now, some people say, I didn't see a retest, but that's probably because you weren't on the smaller time frames. Generally speaking, retests happen very frequently. You're just not on the time frame to see it. So let's scale back out because our targets for this would have obviously been the main, the 61.8%. Okay, so this would have been our trade here. So there, obviously we would have been targeting the main 61%, which is down here. So it provided us an linear 1 to 11. So you can see by just looking on the higher time frames, you would have missed this. You would have got in like here on the daily close of this range. The range being this here. So you would have waited for a break below it, and then you would have got in on this daily close. Now that's just not good enough because if we'd got in here, our stop losses would have been huge. So this is why it's so important. At the moment we look like we're going to start breaking this range, we have to be on the smaller time frames to begin looking for a super tight entry. If we can't see it, we have to keep scaling down until we do see it. Now there's other multiple opportunities here. Like I'm just going to show you other ways we could have traded this. So let's go down to the 4-hour. There's loads of day opportunities within this. So there's nothing here. This just looks like one big fall. It was like a massive collapse. But let's go down to the hourly and see if there was any opportunities within this where we could have traded it. Okay, so obviously we fell out of the sky. We had this little rest phase. We probably couldn't have traded that. Doesn't look like it's any kind of retracement. But was this a retracement? I don't know. Let's have a quick look. So this was a little retracement here. You had previous market price here from this resting phase. You dropped down, you spiked up through the 61.8 and then dropped. There's a little opportunity there, nothing major. And then we kept kind of falling. And then obviously this is where we stopped. Let's just see if we could have seen any opportunities within this. With this little counter trend line here, we broke. Could have we applied a fib to this? Yes, we could have done. So we had the 1 hour 50 EMA and the 38.2 tapped, which is generally what happens with high momentum trades. That could have been a little trade there. Looks like we had another little trade here. We came down, we stopped, which allowed us to draw the fib. We came up, we tapped the 618 twice. Once here and once here. So that could have been another trade. To target 1, target 2. Let's see if there's anything else here. Okay, nothing major that I can see on the hourly. Let's go to the 4 hour and see if we could have seen anything clear on the 4 hour. So we identified this trade and this trade here. Is there anything else that's obvious? I mean, I guess you probably could have done one here maybe. You came up, tapped this, came up from this double top, broke the trend line. Could have we have fibbed this? Yeah, this lines up perfect with the 38.2 and the 50%, so you could have gone short here. On the hourly, you would have had to scale down to get a better entry on this. So scale down. Okay, so this is the hourly, so we can see that actually came up and perfectly tapped it, and then we formed this bearish engulfing. So that was a good little trade here. 30 pip stop. 0%, target 1, target 2. So 1 to 3.4. Let's scale back out on the 4 hour. Okay, so when you form this point and then this point, which is the retest, which I was just talking about, you could have applied a trend line, something like this. And then you had 1 touch, 2 touch, anticipate your 3rd touch, wait for price to stop here. Apply your fib tool. This would have been your next entry point here. So these are all smaller trades. So you could have just gone off this spinning top. Target 1, target 2. That's a 1 to 6. And see, we could have got a better entry on this on the 1 hour. So I can already see we could have got a better entry on this more than likely. Third touch of a descending trend line, wait for the 2 touches to define it first. Wait for price to stop to get the retest. We can see the retest lined up with 618. So we could have just got in here and put our stops. Could have done a 20 pip stop on this. Something like that. Like I said, we'd take profit off at the 0%. Should give us a 1 to 4, and then our overall target would be the -27%. So that is a 1 to 6. So that's another trade we could see within this. Is there any more trades we can see? Let's zoom back out. Let's delete this, delete this. Obviously these are our main trades here. Delete this, delete this. Now, to be honest with you, when we broke this, neckline, there was probably another trade when price stopped. We could have applied a fib from here, and we could have applied our fib like this, and we can see we've been bouncing continuously up to 618 and the 50%. So this could have probably been our next trade. Now it's difficult to tell whether price will reach 27%, but let's scale down to this area here and see if we could have found a really good entry off. Basically, this is a retest of the neckline, this major neckline here, and it's the 61.8%. So this could have been a really great area of interest. So let's see if we scale down on the hourly and see if we could have got better entry on this. Okay, so I can already see a better entry on this. We formed this almost this hammer pin bar, so we could have really gone long. Even here. Price stops 35 pips below. Or alternatively, you could have gotten on this second tap here. Could have gotten on this candle instead and put your stops to clear the first wick. So first tap, second tap. And again, let's zone back out to find targets. Now targets for this particular pair would have been first 0%, which has been met, so that provides you with a 1 to 5.5. And your next target would be -27%, which looks like it's heading towards that direction, so therefore it would make it a 1 to 8. So there's multiple other options in this. So let's just scale out and look at the main ones that we took. So we first plotted the monthly levels, this level here and this level here. Once we had these first 2 points, we waited for price to stop and form this new higher high to determine whether we were, in bullish territory or not. And then we would have applied a fib from here to here, seen that the 61.8 lines up with the monthly levels, therefore we would have executed our first position here. We'd be targeting the -27%, which was here. When we approached -27% and price showed us that it stopped, we apply a fib from here to here, place short positions here, see that the 61.8 lines up with previous market structure. That would be our take profit for our short position. And then when price approached this level, we would then be executing our next long position, and we would simply be targeting the -27% again, which lines up with the monthly level. And then when we approach this level here, we'd be looking for our new entry to take this lower. The way we'd find targets is we'd apply an ascending trend line from this point to this point. We would have seen that from this leg to this leg, this line up with the 61.8, the third touch, so therefore we'd be taking profit from our short position and then to take a new long position. So there's multiple ways we could have bought and sold this on the way up, swing trades, Now, pretty much every single trade that I've showed you within this video, some of them have been insane amounts, 1 to 14s, nearly as high as 1 to 20s, and there's been obviously some smaller trades within these blocks where they've been sort of 1 to 6s, 1 to 4s. There's never anything less than 1 to 3s. We're always trying to swing trade our trades. So hopefully this video has been helpful to you, and you can use this to try and gain some confidence within swing trading the market.